Chanda Kochhar, MD and CEO at ICICI Bank, joins in. Chanda, hi, morning. Now that we have had more time to understand the budget, would you say it's been a pro-health budget?
I think it's a very realistic and comprehensive budget because it has tried to identify what are the priorities of the nation today and tried to address them. If I were to look at the state of our country today, I think there are two clear priorities for us. One is achieving fiscal consolidation, and the second is bringing back investments in the country. I think the most positive part of the budget has been that we are confident that we will complete this year with 5.2% fiscal deficit, and that we have a path to get to 4.8% for the coming year. Talking about bringing back investments, I think there are a lot of pointers in the budget which, if implemented properly, can bring back investments. There is an increase in plan allocation for the social sectors. There is this whole incentive around the investment allowance to bring back investments by the private sector. There is incentive on interest payment towards purchase of first-time small value home that can spur back activity on the small home sector. There is an intent to address the coal issues by talking about public-private partnership on coal, by talking about pool pricing and so on. There is clearly an intent to bring back investment in the road sector by talking about the corridors, by setting a target for awarding of contracts, by talking of a new regulator on the road sector. There's also a mention towards the shale gas, the changing of cost sharing basis to revenue based sharing on the gas side and so on. So I think all these things are very important priorities for us, and if worked upon properly and if implemented properly, I think these are the routes through which we can take the country back towards more positive rates of growth.
Chanda, are you happy with the 4.8% fiscal deficit target and the government net borrowing target at 4.8 lakh crore?
As far as the fiscal deficit number is concerned, of course, a few months back, we thought even 5.3% for FY13 is not a believable number. But now, in end of February, we are talking of 5.2 for FY13. So, in that sense, I would give a lot of credence to what the Ministry of Finance would have planned and on which basis they are talking about 4.8. So I clearly think that the journey from 5.2 to 4.8 is a very welcome journey, and deriving comfort from the fact that we have actually got close to 5.2. I'm feeling confident that they have plans and initiatives with them which will take us to 4.8. So I'm feeling quite positive and confident about that. As far as the government borrowing numbers, I think actually the numbers are more or less in line with the expectation. Though of course as of now one cannot take those numbers as positive for the market. The market is actually reacting in a way that they find the numbers a little too large. Frankly, if you ask me personally, they are broadly in line with the market. So I would really not attach either too much positive or too much negative to it.
Chanda, there were a couple of bank-specific moves as well, and the farm loan subvention being extended to private banks. There's also the 1 lakh rupee concession on interest payments for some home loans. How will this play out according to you?
So as far as the farm loans is concerned, I think it's a very positive enabling factor again for the private sector banks. As all of you know that both private sector and public sector banks have the same priority sector obligations. We have the same agriculture lending obligations, but in spite of that, so far it was only the public sector banks that were getting this interest subvention on farm loans. So by making this interest subvention available to the private sector banks as well, I think just a level playing field has been created for both the private and the public sector banks. As far as the interest incentive on the smaller housing loans, I think that's a very positive factor again, because that can spur the activity on housing and housing loans even in the smaller areas and for small value loans.
Chanda, the push on infra funding also for IDFCs which you have already set up, do you feel this will relieve some of the pressure that banks are facing on the infra front?
So, in fact, I think, the IDF set up with lead of ICICI Bank would probably be the first IDF to do a real transaction very soon and before the end of this financial year. So I think we've made a lot of progress on not just announcing the IDF, but actually making it effective and impactful. I think the long-term positive impact of initiatives like IDF is that they provide that widening of the sources of funds for infrastructure development. So as you know, there is a large amount of almost $1 trillion of infrastructure spend planned for the 5-year plan. And out of that, a large part has to come from the private sector. So when private sector has to invest in infrastructure, so far it's mainly been banks that have been providing funds for investment in infrastructure. What we should do going forward is that while the banks should initially fund or lend towards the infrastructure projects, but gradually as the implementation risks get over, as the projects get implemented, there should be other entities like IDFs, like pension funds, like insurance companies who should take over these loans from the banks so that the banks can free up their liquidity and their exposure limits to fund the next round of investment in infrastructure. And indeed, movement in the sector of IDFs, etc., is really going to help that cause, and it's really going to make these kind of funds available that can free up the liquidity and the exposure limits of the banks.
Chanda, so what kind of a view do you feel the RBI will take on this budget, and are you hopeful of interest rates in the system coming off as we head into FY14?
Well, RBI would look at not just one day's budget announcement, but of course on a day-to-day basis, what happens to inflation and what happens to growth and what happens to fiscal consolidation. But I would just say that from this budget, there is a lot of comfort to be, taken at least on the fiscal consolidation path, and especially from the fact that, even in terms of actuals, we are talking of about 5.2% for this year. So at least on that side, there is a lot of comfort to be taken.
Chanda, really appreciate your time and thank you for your insights.